Now, the main purpose of this webinar is to go over a pretty simple strategy that deals with the first 6 minutes worth of price action in a stock. This is a strategy that I use and need to get back to using, quite frankly, with big board stocks. I've never used it on penny stocks, although I suppose the same characteristics would probably apply. But for the purpose of this webinar, it is most helpful with options, and it can really come in handy with just being able to identify, hey, which way is the stock going to trend on the day? Isn't it nice if after 6 minutes you can say, all right, it's probably going higher throughout the day or it's probably going lower throughout the day? And if you don't know within those 6 minutes, this strategy will still give you something to watch for so that you can identify it. All right, so the premise for this is you are going to use a 3-minute chart. That's number one. This is a strategy that is based solely on a 3-minute chart. I don't know that it doesn't apply to maybe a 15-minute, 60-minute chart, what have you, but the strategy I'm covering today is only on a 3-minute chart have I personally observed it and am confident in it and willing to show proven examples. So that's the first thing to know and understand, that this is, you're going to be looking at examples from 3-minute charts today. All right. So with that said, there's a couple terms you need to know and understand, vocabulary terms, if you will. All right. And here we are, I'm zoomed in on the first 15 minutes of the day on Apple from Friday. Okay, and I'm looking at a 3-minute chart. And what you need to know is the first 3-minute candle is referred to as the initial 3-minute candle, and the second 3-minute candle is referred to as the initial 6-minute candle because it is price action ending at 9:36. So the terms you need to know are the initial 3-minute high and the initial 3-minute low. Okay? What I mean by that is you take the range from the first 3 minutes of the day on Apple on Friday. Your initial 3-minute high was 460.40. Your initial 3-minute low was 458.50. Those are two of the terms. Two other price points to be aware of is just the opening price on the day. So your opening price was 458.59, and also your initial 3-minute close. Your initial 3-minute close was 460.07. All right, so just from the first 3-minute candle, you have the opening price, the initial 3-minute close, the initial 3-minute high, and the initial 3-minute low. You'll see me refer to these sometimes in chat as the I3MH or the I3ML, just an abbreviation. Okay? Secondly, when you look at the 6-minute candle, what do you think you have there? You have 3 more reference points. The initial 6-minute low, that is the low from the 9:33 to 9:36 range. So your initial 6-minute low on Friday, August 9th on Apple is 459.51. Your initial 6-minute high was 460.46, and your initial 6-minute close was 460.02. So your I6MH, I6ML, and I6MC. It's very important to understand that vocabulary moving forward, because everything I refer to from this point on is going to be in terms of the initial 3-minute high, the initial 3-minute low, the opening price, the initial 6-minute high, or the initial 6-minute low, etc. So, with that said, does everybody understand the terminology behind those two 3-minute candles and what I'm referring to exactly when I say the initial 3-minute high or initial 6-minute high, initial 6-minute low? Is that clear? If it isn't clear, say so and I will do a better job. But it seems like everybody understands that, so that's good. Okay, so now that we understand the vocabulary, I can actually get into the theory behind the strategy. And that theory is, and this is my own theory, I just call it the 3 or 6-minute rule. That is, when a stock closes above or below its initial 3-minute low, initial 3-minute high, or initial 6-minute low, or initial 6-minute high, by 10 o'clock, it will move in the direction of that close, provided that those same levels then act as support or resistance. I'll write it out in chat so you can see. Again, this is on a 3-minute basis. When a stock closes above or below, that means you get a 3-minute candle close. When a stock closes above or below its initial 3-minute low or initial 3-minute high or initial 6-minute low, initial 6-minute high, by 10 o'clock, it will move in the direction of that close, provided that those same levels, so the initial 3-minute low, initial 3-minute high, those are the same levels, that's what I'm referring to, or the opening price, your initial 6-minute close, etc. Provided that those same levels then act as support or resistance. Does everybody understand that statement? I'm going to follow this up. I've got 22 examples amongst 7 different stocks to illustrate this theory. The key takeaway is that it's when a stock closes above or below the level, that's on a 3-minute candle, okay? Not when the stock simply pierces the level, trades above it, but then, moves back lower. All right? So is everybody good on the basics? Can I get to the examples now to illustrate? And if you're not good on the basics, once you see some examples, it'll probably make a lot more sense. All right? So keeping what I just said in mind here now, we're going to look at the first example. I've got 6 examples, all from Apple, out of the last 10 days. So starting first with Friday, August 9th. All right? Let's see what we had. So here's the opening action on Apple. All right? Apple opens at 458.59, puts in a high at 460.40. That was your initial 3-minute high. Your initial 3-minute close, 460.07. Then, your next candle, your initial 6-minute candle, you pierced above the 3-minute high. However, you did not close above it. And you got a range of a 6-minute low of 459.51, a 6-minute high of 460.46. So right away I've got a few different reference points, at least 4 of them. Okay, I've got my initial 3-minute low at 458.50. I can make all of these determinations right at 9:36. that initial 3-minute low, 458.50, initial 3-minute high, 460.07, opening price, 458.59, initial 3-minute close, 460.07, initial 6-minute low, 459.51, initial 6-minute high, 460.46, initial 6-minute close, 460.02. That's 7 or 8 reference points, levels that I can start watching after only 6 minutes of price action. So now I've got those levels in my head, and based on the theory, I'm looking for a close above or below one of those reference points to signal that it will move in the direction of that close, provided then that those same levels then act as support or resistance. All right, so let's see what transpired. So your next candle, 9:39, look at our close, 459.48. That is below your initial 6-minute low. So right away, I've got a bearish signal. I'm closing below that initial 6-minute low. All right. Then our next candle continues that move lower, and now we get a close below that initial 3-minute low and the 6-minute low. Okay, so just at this point in the day, after only 12 minutes have gone by, I can say, all right, I've closed below the initial 6-minute low, I've closed below the initial 3-minute low on back-to-back candles, closed below the opening price, closed below all the reference points I have. Based on the theory then, this thing should trend directionally lower as long as, since it's a short, as long as those same reference points now act as resistance. All right? So based on that, at 9:42, I'm thinking to myself, all right, I now need to see, in order for this to truly remain bearish, I need all of these ranges to act as resistance. So let's take that 6-minute low, 459.51, to the 6-minute high, 460.46. I can make the statement, as I'm watching Apple in real time, okay, Apple is a short as long as it stays below the initial 6-minute high and the initial 3-minute high. Only if and when it can get above those highs will I undo my short bias. Let's look at what happened. All right. So then over the next few minutes, look at where Apple rallied to at 9:48. Okay. Look at where it stalled out. You had a rally back up above the initial 6-minute high, 6-minute low. But then it couldn't close above the initial 3-minute close or the initial 6-minute close, couldn't breach the initial 3-minute high or 6-minute high. Your next candle at 9:51 then closed right back below your initial 6-minute low, and you were right back near low a day. So there's your short setup. It's there, it's still in play, it's still intact, and I got the resistance where I needed to get resistance. And then you look at, 10 o'clock, what happened? Nice move lower. Nice directional move. Apple dropped from 458.50 down to 454.50. $4 drop. Translate that to options. I know that the options were moving very nicely. All right. So there's your first example of recognizing a close above or below one of these ranges, one of these reference points, and then seeing those reference points then act as resistance in order to confirm that the stock is indeed going to go in the direction that you need it to. Also, make note that we then got movement right around 10 o'clock. Why is it important to note the time? Well, if you get a bearish or a bullish setup, but then time is going by and there's no movement happening, you have to wonder, hey, how come it's not advancing or decreasing in the direction that the signals have indicated it was going to? And that's a potential red flag. I have more on that with my next example. Again, still looking at Apple here. Now I'm looking at August 8th. Well, first of all, did that example make sense and understand what I was looking at? Anybody have any trouble with that? All right. So looking at August 8th now, Thursday. This is a great example here because it touches on the time aspect. All right, so here we go. Apple on oh, I'm looking at the wrong day. Need to be looking at Thursday. No wonder that didn't look right. Okay. So Thursday, August 8th, pretty clear-cut setup here. Check this out. All right. So we've got our initial 3-minute range. Gives us that first reference point on Thursday. Your initial 3-minute range here opened 464. Initial 3-minute low 462.88. Initial 3-minute high 464.14. So right away in my head I'm thinking, all right, what's at 9:33? After that first 3 minutes, I'm watching for a couple things. Number one, does it go below the initial 3-minute low, close below the initial 3-minute low, or does it close above the initial 3-minute high? Okay. We saw then at 9:36, we didn't close either above or below the initial 3-minute high or the initial 3-minute low. So now that gives us our next reference point. Our initial 6-minute high, 463.37. Initial 6-minute low, 462.75. Also want to be aware of the initial 6-minute close, 463.29. Okay? So then you look at 9:39. Look at your next candle. Closes below both the initial 3-minute and the 6-minute low, right? So now you can say, all right, this one's a short. It closed below the initial 3-minute low, closed below the initial 6-minute low. So now what do I need? I need the initial 6-minute high and 3-minute highs and, those reference points. Now I need those to act as resistance if this is going to be a continued short going into the 10 o'clock hour. All right. Now, so Apple then kind of stabilizes and goes sideways here, right? 9:42 through 9:45. And however, look at this candle here at 9:45. Where does it get rejected? Right at the initial 3-minute high. Struggles to advance on a closing basis much above the initial 6-minute high. Your initial 6-minute high, 463.37. Your close on that candle, because remember I'm concerned more with the closes on that basis, not just where the price went. Your close, 463.55. Why am I concerned with the closes more than just the prints? Because to me the closes indicate more definite price action, more definitive price action. So never got a big advancement. However, you did have a little rally. So now at this point I'm thinking a couple things. All right, well, it didn't really break down like it might have, or like I could have expected it to once that 3-minute high and once that 3-minute low and 6-minute low broke. However, now it is going on 9 minutes worth of upside price action. 9 minutes worth of upside price action. Let's see. I would think that after 9 minutes of upside price action, there should have been a nice move higher. Well, 9 minutes worth of upside price action, and the stock is still trapped below its initial 3-minute low. Sorry, its initial 3-minute high. All right, perfect rejection right there. So that short trade is still intact. What happens? You come back down, you close back below that initial 6-minute low and 3-minute low, and then the following candles, 951, 954, both of those highs are below the initial 6-minute high. So first we had our 3-minute high act as resistance, now our 6-minute high is acting as resistance. And then look, going into 10 o'clock, right on time, always want to see that move start to happen by 10 o'clock or so, right around there. Boom, 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 lower, lower, lower. Price dropped from 462.70 down to 458. A nice $4.70 drop, and continued to make a new lower day at 457.95 even 45 minutes later. All right, so that one was just another setup where you broke below that initial 3-minute low, 6-minute low. Then you have that setup intact. All right, so here's a good question. If at 9:45 or 10 a.m. it breaks the initial 3-minute high but closes below it, is that still a short? Okay, so for instance, like this candle here at 9:45, where you came up towards the initial 3-minute high but still closed below it. Now you have something else to watch for, because this is possibly catching you off guard. Maybe you took a short at 9:36, but you stopped yourself out because you're kind of like, well, wait a second, it's not continuing lower, I'm going to wait and see. Now you kind of have a secondary decision, and you say, all right, maybe it's actually a long. But if that's your mindset, what you need to start seeing, if it is a long, is now we need to start seeing the initial 3-minute low and 6-minute low act as support. If it does reverse off of this and get above that initial 3-minute high, then you should see the initial 3-minute high and 6-minute high, or any of these reference points, start now acting as support. So it is arguable that it could be a long instead of a short, but when you look at the price action that ensued right after that 9:45 candle, that 9:48 candle closed back below the initial 3-minute low and 6-minute low, and then following that, you then had your 9:51 and 9:54 candles staying below your initial 6-minute high. And then again at 10 o'clock, you were, that move got well underway. Does that answer your question? And that question is actually a great time to ask, because my next example is an example of a long trade turning into a short trade. So let's get to that. And that is August 6th. Tuesday, August 6th. Long trade turns into a short trade. Alrighty. So here we are, Tuesday, August 6th. Your initial 3-minute high, 469. Your initial 3-minute low, 467.95. Your initial 6-minute close, you get a close above your initial 3-minute high at 9:36, and then making things even more attractive on the long side, that 9:39 candle closes above your initial 6-minute high. So you've broken your initial 3-minute high and your initial 6-minute high. We're good to go on the long trade. That's my mindset. That's what it looks like here to me. So now we have a long setup intact, as long as what? As long as the initial 6-minute low and 6-minute high are acting as support, and then your initial 3-minute low needs to act as support as well. So there's that factor. Okay. So pop quiz, 20 minutes here into this webinar. I just said what I want to see in terms of price action, where I want it to hold support. But what else must I consider? What's another variable in addition to price that I have to consider when measuring a long trade versus a short trade? Volume, yes, but what I'm thinking of is less obvious. I think it's the most overlooked aspect of day trading. Volume's not the answer I'm looking for. Still don't see the answer. Give you guys another 30 seconds to come out before I play spoiler. It doesn't have anything to do with price, guys. All right, the answer is time. In addition to price movement, I have to consider time. Right now, I have a long setup, right? Long setup intact. Broke the initial 3-minute high, broke the initial 6-minute high. So when I say time, what I mean is, since I have a long setup intact, I've gotten these, bullish events here going off. That means I should get a bullish move, by 10, 10:05, 10:10. I just showed you short trades that started playing out right around 10 o'clock. So this long trade now has to me, play out by 10 o'clock. Time is extremely important. And let's look further at this example as to why. So here we are. We get slight continuation, right, at 9:39 to 9:42. Apple continues higher, but then it falls into this consolidation pattern. From about 9:45 on, it starts actually just going sideways. And then you look at this 9:54 candle, it goes below the initial 6-minute high and tests the initial 6-minute low. It does act as support. That's all well and good, right? And then we still consolidate. 10:06, we're still consolidating. Granted, we're above the initial 6-minute high. We're above our initial 3-minute high. But you have to start to consider, hey, what's going on here? I broke above the initial 3-minute high, broke the initial 6-minute high, and it's 45 minutes into the day, or 40 minutes into the day, and it's not moving higher. That's kind of weird. I thought that this move should have happened by now. That has to be your mindset. Okay, you look at this thing at 10:18. Now you're closing below the initial 6-minute high. So we've got a couple things going on. We've got a consolidation pullback going on at a time when there should have been a bullish move transpiring. So that's the red flag right there. This is a very important point. Red flag. When a break above or below the initial 3-minute high or 6-minute high or 3-minute low or 6-minute low doesn't result in a directional move around 10 o'clock, you have to think, why isn't the move happening? Okay? So then, around 10:18, you close below that initial 6-minute high. Now you start thinking to yourself, all right, so we got that move that didn't really play out. Maybe this thing's a short. What do I want to look for, though, if it's a short? I want to now see stuff like the initial 6-minute high acting as resistance. So 10:18, we close below the initial 6-minute high. All right, that happens at 10:18. We get another close below the initial 6-minute high at 10:21. Then we pierce the initial 6-minute low for the first time all day at 10:24. And then look at the rally at 10:27. Where does it get rejected? right at the initial 6-minute high. Remember, initial 6-minute high, 469.70. Your 1027 high, 469.66. So now we're starting to see the initial 6-minute high act as resistance. 1030, boom, now we get a close below that initial 6-minute low, starting to get some, more confirmation on a short trade. Now what do we need? We need a close below the initial 3-minute low. All right, 1033, close below that initial 3-minute low. 1036, Apple is not bouncing off of that initial 3-minute low. And then, the move lower ensues from 467.60 down to 463.40, a nice $4 move lower. So this is a prime example of why time is something you always have to be aware of when trading, and why you have to have a time frame in mind for your trade. The obvious stop loss is when a support level breaks, or if you're in a short trade when a resistance level breaks. But what do you do when support hasn't broken and resistance hasn't broken and the stock is just trading sideways? Are you just going to sit there and wait? Or are you going to have a time frame in mind where you're going to say, all right, if this thing doesn't get moving by XYZ, then I'm out. All right? Again, that was August 6th. Next example, July 31st. So here we are again. 6-minute high. We close above our initial 3-minute high, so I'm thinking, all right, good long setup right here. Let's see what transpires. We close above our initial 3-minute high. So now our next reference point, now what do we need to do? Well, we have to close above that initial 6-minute high. Okay? So right away I'm looking for what happens next. Does it close above the initial 6-minute high, or does it close below the initial 6-minute low? Well, you look at your 939 candle, didn't do either, went sideways. Okay? You actually just pretty much consolidated for the first half hour, right? Consolidating. And here we go again with that whole time thing. We got to close above the initial 3-minute high, and the stock is holding support. It hasn't gone below its initial 6-minute low or 3-minute low. But how come we haven't broken that initial 6-minute high yet? That's, what's going on? Now I'm still waiting, where now if we close below that initial 6-minute low, it's starting to look pretty bearish to me, and now I want to see that 6-minute low act as resistance as it sets up a test of that initial 3-minute low. So, price never closed above the initial 6-minute high after closing above the initial 3-minute high. And then at 10 o'clock, you get this move here where you close below the initial 6-minute low. So now it seems like a pullback might be underway after failing to advance. And then 10:06, you close below the initial 3-minute low. The move is, well underway. And, 10:15, it bounced a little bit, but it stayed south of that initial 3-minute low. Initial 3-minute low, 454.33. 10:15, it could only get up to 453.60. Short trade still intact. Went all the way down to 449.43 before recovering. So from 10 o'clock, 456 down to 449.43, nice $6-7 move lower. Now, we'll get a long example here on Apple, since we've had a lot of shorts. So, hopefully things are starting to be pretty clear at this point. You look at July 30th on Apple, Tuesday, July 30th. Okay? So your initial 3-minute high, 450.60, initial 3-minute low, 449.23. Initial 6-minute high, 451, initial 6-minute low, 449.32. So you didn't break the 3-minute high, you didn't close above the 3-minute high or the 3-minute low, and then at 9:39 you didn't close above or below the 3-minute high or 6-minute high or 3-minute low or 6-minute low, but then at 9:39 you get a nice close above both the 3-minute high and both the 6-minute high. So I'm bullish. I'm looking for that move higher to play out. All right. So then, as we get into 10 o'clock, another similar situation where price hasn't really advanced, but it's still holding support. And now you haven't even come below the initial 6-minute high. Look at your initial 6-minute high, 451. Look at this pullback at 10 o'clock. Found support perfectly at 451.17. And you want to see that move start to happen around 10 o'clock? Well, if you look at 10 o'clock, you had a nice uptrend play out, okay? And then, just throughout that 10 to 11 o'clock hour, you trended higher, put in higher highs, from 10 to 12 o'clock. So, another easy setup right there. So those are the examples with Apple. There is one more that I'll use for a later part of the segment. Are there any questions over what I just talked about there? Okay. So now the beauty of this strategy, I just showed you all these examples with Apple. You might say, oh, well, that's good, but I don't trade Apple. Well, here's what's awesome about this, is this strategy isn't just something you look for in Apple. It's something you look for with any stock. So I'm going to show you some examples now with Amazon. Similar situations. All right. From this point on, I'm not going to do as much explaining because I feel as though I've, explained the premise behind what to watch for. So now it'll be just pretty much more solely based on examples. All right, so Amazon, starting with July 26th. If you let me zoom in here. All right, so Amazon here, July 26th, your initial 3-minute high is at 299.88. Your initial 3-minute low is at 295.55. Your initial 6-minute high, 6-minute low, you didn't close above or below the initial 3-minute high, and you just kind of channeled. But then at 9:45, you get a nice close above both the initial 3-minute high and the initial 6-minute high. So we have a long setup. My bias is long. Now I want to see the initial 3-minute high act as support. Nice continuation where once those highs were broken, Amazon went from 302 up to 304. Okay? And then here's the beauty of this. Maybe you missed that move, right? But now where some people don't really know where to enter, you can say, all right, I'm going to buy, I want to go long maybe on a pullback towards that initial 3-minute high or a pullback that holds the 6-minute high. Look at this candle right at 10:06. Your low 299.60, right in line with that initial 3-minute high and opening price. Pulled back, you needed to hold support. It does just that, starts uptrending again, and this thing ended up making an amazing move from 300 all the way up to 313. So straightforward there. Even though Amazon gapped down that day, it never broke below that initial 3-minute low. Never closed below that low, never closed below the initial 6-minute low. You didn't really have a clear setup until 9:45, but once you did get that setup, it was a great one. Okay, so that was the long on Amazon. Then Monday the 29th brought us the short. And kind of the exact opposite setup that I just talked about. So your initial 3-minute low and your initial 6-minute low and those highs and stuff, Amazon didn't close above or below the initial 3-minute low or above or below the initial 6-minute low the first 9 minutes of the day, but then you look at 9:42, Amazon closed below both the initial 6-minute low and the initial 3-minute low. So now I've got a short setup as long as those levels start acting as resistance. Well, you look at the price action from, at 9:45 and 9:51, Amazon stayed below the initial 3-minute low, trended a bit lower from 310.48 down to 308.70, and then bounced a little bit, but look at this rally at 11 o'clock. Some people might think Amazon's reversing at this point. However, where is it rallying to? Where does it go? Right at the initial 3-minute low, your initial 6-minute low. Perfect rejection right at those two levels that we now needed to see act as resistance in order for this to be a continued short trade. Put on a low risk reward short trade there, knowing that your risk is a definitive move above the initial 3-minute low or 6-minute low. Stock then declined from 310 again, this time down to 305, nice $4 move lower, $4 or $5 move lower. Okay. Next example, August 5th, Monday. Cut and dry right here. Example on Amazon. Price closed below its initial 3-minute low and 6-minute low at 9:39. That took it down to 301.90. Downtrended throughout the day down to 298.30. Nice $3-4 drop. So that one was an early signal. Never made any real attempt to rally back towards those two 3-minute lows and 6-minute lows. So, the short trade signal was there from the beginning. And unlike with Apple, where it was a little tougher because we had to see, all right, well, is it going to act as resistance now? Amazon was, straight up committed to that directional move, and it just played out from the moment it showed up. All right, moving on to Google. Google examples, number 1, August 6th. So Google opens up that day, makes a nice move higher, opens at 9:05, initial 3-minute high, 9:07.45. Then your initial 6-minute high, your initial 6-minute close, 9:08.42. That's above our initial 3-minute high. So that's a long signal potentially. However, what do we still need to happen? At this point, Google looks good, right? Broke its initial 3-minute high. Okay? Price is up around 9.10. However, what do you see on Google? What do you see not happening? No move above the initial 6-minute high. Instead, you just consolidated. Okay, so now, just like talked about with Apple earlier, you got to start wondering, hey, needs to break that initial 6-minute high, and it hasn't done so yet. It's coming up on 10 o'clock. You know, what's going on here? And you look, and it was actually a short, because Google then closed below its initial 6-minute low at 10:06, and then trended down towards its initial 3-minute low, and then at 10:27 closed below the initial 3-minute low. That took the price down to 903.80, and it trended down to 895, a nice $8 drop. Okay, so another example there of, yeah, you could close above that 3-minute high, and that could potentially be well and good, but we still need to break that 6-minute high. And in addition to that, we have to be aware of time. Have to be aware of time. All right, moving on. Facebook. Been a great uptrend recently. How have you been able to play it? You know, how do I know that Facebook's going to make these big moves? I don't want to buy it after a 30% gap up. I think I missed the move. Well, if you're using this strategy, you have lots of examples to look at here where Facebook really played out nicely. So starting with July 29th. So pretty textbook here, guys. Initial 3-minute high, 34.21. Your initial 6-minute close was above the initial 3-minute high. So right away we've got a bullish signal. What's the next thing we need? Now we need to close above that initial 6-minute high. 9:39, close above the initial 6-minute high. We have consecutive highs there from 9:36 to 9:39. So my bullish signal is confirmed at 9:39 when the price is at 34.50. That's my buy signal. And then we catch a nice rally from 34.50 all the way up to 35. On Facebook, you know, that translates to a nice percentage move. Meanwhile, then the stock just kind of trended and went sideways for much of the day. However, look at where it didn't go, right? Your initial 6-minute high at 34.54, the price never even got close to that initial 6-minute high during the consolidation. And later on in the afternoon, you know, continued the rally and made a nice move up to 35.60, a whole dollar above that, you know, initial 6-minute high. So nice clean setup right there on Facebook. That was July 29th. Okay, July 31st. Facebook's had a great move. You know, when is the move going to be over? When is it maybe going to pull back? All right, well, let's look at this action here. Your initial 3-minute high, 38.31. Initial 3-minute low, 37.87. Price never closed above the initial 3-minute high, never closed above the initial 6-minute low. Staying closer to the initial 3-minute low and the initial 6-minute high. So while you don't have a short signal yet, you have more signs of a short trade versus a long trade. And the reason I say that is because Facebook at that time on Wednesday, July 31st, was having an easier time staying near the initial 3-minute and 6-minute lows as opposed to the initial 3-minute and 6-minute highs. So that brings me to a point that when consolidating in between the initial 3-minute high, 3-minute low, or 6-minute high and 6-minute low, make note of where is it staying closer to. Because then at, what, 9:42, you close below the initial 3-minute low and 6-minute low. You've got the opening price. Remember I referenced the opening price as also being important. And your initial 6-minute close. Those are both right around 37.96 and 37.98. So I could say, all right, so I got that short signal at 9:42. Now, as long as I'm staying below, the initial 6-minute close, the opening price, then this short trade is intact. Well, you look at Facebook's highs on a closing basis. The highest it closed was 37.97, right at that initial 6-minute close. And then you got a nice move lower right around 10:36. But what I want you to really focus on is this rally at 11 o'clock. Where did the rally go? Right at 11 o'clock, took Facebook right up to that initial 3-minute low, 6-minute low, got rejected perfectly, ended up going from 37.88 down to 36.30. I mean, that's a nice drop there on Facebook. Intraday, if you're catching puts on that, that's paying out extremely well. All right, next example on Facebook comes on August 1st. So here we go again. Initial 3-minute low, 36.94. Initial 3-minute high, 37.36. Initial 6-minute high, 37.34. Initial 6-minute low, 36.92. Initial 6-minute close, 37.22. All right, at 9:39, we get a move. We get a close above both the initial 3-minute and the initial 6-minute high. Beautiful, okay? Now what do we need? Now we need to see these reference points start acting as support if that long signal is going to be valid. Look at this pullback at 9:42 to 9:45. Price dropped to 37.19, 37.20. Well, think about our initial 6-minute close, 37.22. So we're at a reference point still. Nice rally. Price rallies from 37.30 all the way up to 38.30. Again, a very, very nice, consistent move there in Facebook based off of those initial 3-minute high and 6-minute highs. Okay, moving on. Tesla. Tesla's been a hot stock. Maybe you don't know how to get a hold of this thing lately. Well, this trend will give you some ways about it. So August 7th here, look at Tesla. So August 7th, your initial 3-minute low, 6-minute low. Initial 3-minute low, 140.55. Initial 6-minute low, 140.63. Then at 9:36, you go crashing through both of those two lows. So there's your short signal. All right, there's your short signal right there. And Tesla just never recovered. I mean, it dropped from 140 down to 137 and, rallied a little bit, but never even got close to that initial 3-minute or 6-minute low. And then the price made another drop from 138.60 down to 132.30s. So a nice big drop there on Tesla using the strategy around the initial 3-minute and 6-minute lows. Okay, August 2nd. Just showed you a short trade on Tesla. Now we'll look at a long trade. And this is a good example of why closing basis, not where the stock has gone, is important. You look at your initial 3-minute range, 133.79 on the low, 135 on the high. Initial 6-minute range was within that same range, 3-minute high, 3-minute low. But then look at 9:45 where you broke below the initial 3-minute and 6-minute low, but you didn't close below it. So you never got that short signal because remember, we care about closes. Closes, not just wicks. And then 9:54 price closed above the initial 3-minute high, closed above the initial 6-minute high. There's your long signal. Look at the consolidation, perfect consolidation above the initial 3-minute high and 6-minute high. You know, we want a signal by 10 o'clock, and we got that by 10 o'clock, and a nice rally from 135 all the way up to 138. Okay, so I focused on tech stocks a lot. You know, that I primarily just trade tech stocks. But so I was like, well, people are going to say, well, what about non-tech stocks? So let's look at JP Morgan, JPM. Example from August 8th. You look at your initial 3-minute low, 55.42. Never broke the initial 3-minute high, never even broke the initial 6-minute high. At 9:42, you had closed below both the initial 3-minute low and the initial 6-minute low. So we have a short signal has just been given. Now we need to see that initial 3-minute low act as resistance. Well, stock stayed below that low ahead of 10 o'clock. And then right around 10 o'clock, started making new low of days. Price dropped from the signal from 55.30 down to 54.12. So really nice price drop. If you're catching a $1 drop in a $55 stock through the options, I guarantee you those things are moving at least 50%. At least. All right. So another kind of random stock here that I don't trade, FCX, Freeport McMoran. August 7th. Again, you know the drill by now. We're looking for closes above that initial 3-minute high or below the initial 3-minute high. You got a close above that initial 3-minute high at 9:36, and then you closed above the initial 6-minute high at 9:39. Never went below the initial 3-minute low or the initial 6-minute low. So your buy signal with confidence is at 9:42. Price is at 29.27. And then nice big breakout at 9:45 where it just rips from 29.70 from that 29.27 mark for a nice 1.5% move higher, and pulled back but stayed above that initial 6-minute high. You look at the consolidation, from 10 to 10:30, 10 to 10:40 or so, was staying above that initial 6-minute high, made a nice further rally from 29.50 up to about 30 bucks. So those are all the simple examples, the examples that are just strictly based on the basics of the strategy. Okay? Now I want to show the strategy in regards to a gap fill, because there are some instances where you'll have all the signals lining up for a short trade or a long trade, but you still do have to consider price. All right, so let me show you some examples that'll illustrate what I'm talking about here. Going back to Apple. August 5th. All right. August 5th, stock gaps up, right? And Apple closes below the initial 3-minute low, closes below the initial 6-minute low, so we've got a short trade, right? However, you have to consider then that this is coming on a gap fill. So even though you had a short trade, you look at 942 and it was right as that gap was filling. And I'm going to tell you the price level to watch. Anytime you get a short signal off of a gap up, such as this example right here, when the gap starts to fill, the reference point is the last 3-minute low from the previous day. The reference point on a gap fill on a short trade is the last 3-minute low from the previous day. So that makes 462.17 the last 3-minute low from Friday, August 2nd, going into August 5th. That makes 462.17 a key reference point. Look at Apple's low, 462.15, and then look at this price action here at 945. Makes up the losses from that move lower and closes above the initial 3-minute low and the initial 6-minute low. So now, if you're still shorting this, you say, all right, I definitely need this thing to come back below the initial 3-minute low, 6-minute low. Or if you're starting to go long, you're thinking, all right, maybe this is a long trade now as long as it stays above the initial 3-minute low and 6-minute low, and I've got resistance at the initial 6-minute high and 3-minute high. Well, you look at the price action that ended up playing out on Apple. It was a nice move higher. Closed above that initial 3-minute low and 6-minute low. Your next candle closed back below it, but then your next candle at 9:51 brought you right back above both of those lows. And then it was just lights out from there. Apple rallied from 464.30 up to 468.70. You know, even if you waited all the way until kind of the confirmed buy signal at 10:03, which was above the initial 6-minute high and 3-minute high, you still were able to catch a move from 466.25 up towards that 468.50 mark. Then, though, maybe you missed all of it, you look at 10:33 price action. Pullback, where does it pull back to? Right towards that initial 6-minute high, down to 466.24. Your initial 6-minute high was at 465.96, so you held that. Nice continuation, made a new high day. Another pullback at 11:36, contained by the initial 6-minute high, rallied, made a new high day. So that's on a gap fill. All right. Looking at Google now. Looking at July 30th. Same thing on Google. So you get a short signal. You get a short signal as you broke below the initial 3-minute low and 6-minute low at 9:39. You trend lower, but you're filling the gap. Last 3-minute low from the previous day is 881.07. You look at Google. Once it got down to that low, it stopped dropping. Okay, once that gap was filled, stopped dropping. No more continuation of that move. Started bouncing around, going sideways a little bit, consolidating. And then at 10:15, you get a close above that initial 3-minute low and 6-minute low. At 10:27, you closed above the initial 6-minute high. And then you look at the pullback that then ensued from, at 11 o'clock, look at where it found support. So we reversed off of the gap fill, came above the initial 3-minute low, 6-minute low. So now our mindset is, all right, this thing's actually a long trade. Now we just need those lows to hold as support. Well, look at Google at 11 o'clock, held support right at that initial 3-minute and 6-minute low, around 885, and ended up rallying all the way up to 895. Lastly, Facebook, July 30th. Okay, so stock gaps up, then the price closes below its initial 6-minute low at 936, closes below the opening price, tests the initial 3-minute low. However, your last day's 3-minute low was at 35.30. Look at Facebook at 942. Pulled back to 35.32. Nice hard bounce. Never really closed below the initial 3-minute low. Never gave a good hard short signal. And then at 10:03, you close above the initial 6-minute high for the first time all day. So there's your long signal with conviction at 10:03. Stock is at 35.96, and then just explodes higher, moving to 37.57 from that 35.96. That translates to a percentage gain of 4.4%, which again, in the options, that was probably a 200% move. All right, so those are examples of when the strategy needs to be taken with a grain of salt if it's on a gap fill, okay? And your reference point becomes the price action around that previous day's last 3-minute low. Okay, now lastly, I'll show you two examples of where the strategy might not go off in the immediate term, but by moving above some of those key reference points later in the day, it sets up a long trade. All right, so let's look at Freeport again, FCX. This time I'm looking at August 8th. Okay, so stock gaps up, closes above that initial 3-minute high, but doesn't close above the initial 6-minute high, and closes below the 6-minute low, but doesn't move below the 3-minute low. So, you know, on something like that, you know, 10 o'clock, 10:15 has come and gone, and there hasn't been any move. So you're just kind of like, all right, to me, this is something you stay away from. There's no directional move going on, so why am I going to trade that? However, what do you want to watch for? You still want to watch for either a close below the initial 3-minute low or a close above the initial 6-minute high. That range, you know, that 930 low, 936 high. Okay, and then you look at Freeport at 11:10. You got a green close above that initial 6-minute high, so there's your long signal with the stock at 30.50. There's your buy, and then it ends up rallying up to $31. And I believe actually broke 31, yeah, hit 31.14 later on in the day. So that's an example where the long trade set you up later on. All right, and here's a little bit more complicated example, the last one with Tesla from just the other day, August 8th. Again, dealing with midday examples. All right, so Tesla never gives you a super clean signal. You know, closes below the initial 3-minute low, closes below the initial 6-minute low, and trends lower for a minute, but then, you know, starts closing back above the 3-minute low and 6-minute low, and never really gives you good hard confirmation on that short trade. So now, though, what you might notice on Tesla, again, this is more complicated. This is a way to start use the strategy in more advanced methods. You look at this price action and you say, okay, close below the 6-minute low, close below the 3-minute low. Now, you know, let's see. All right, nice continuation, 153 down to 150, but then it bounces and is staying below that initial 3-minute low. At 10:09, I see a green close above both the 3-minute low and the 6-minute low, but that doesn't get followed up by another green candle at 10, 12. So what I can say at that time is I can say, all right, it's still not a long because it's still struggling with that initial 3-minute low or 6-minute low. What it wasn't able to do was post back-to-back green closes above that initial 3-minute low. So what I'm watching for before I see it is the ability for Tesla to close back-to-back green closes above the initial 3-minute low to maybe signal that, all right, this thing is about to get going and start rallying. Well, if you look at 11:15, Tesla got back-to-back green closes above that initial 3-minute low for the first time all day, and then you say, all right, now I need the 6-minute low and 3-minute low to start acting as support. Well, you look at the pullback from 11:21 to 11:25. It was contained by both of those lows. So you've got, a bit of a long trade showing up based on the back-to-back green closes above the initial 3-minute low. Hadn't done it all day. Nice rally up to a new high day. You look at 12:21. You move above the initial 3-minute high and 6-minute high. Does anybody notice something, though, about this price action right around 12:21? And I'll just tell you that it has a lot to do with what I just said I was watching for on the long side, as far as back-to-back green closes above the initial 3-minute low. This trend line represents the initial 3-minute high on my screen. Does anybody notice something that Tesla was unable to do on that move once it got up to 158? Tesla never closed back-to-back green closes above that initial 3-minute high, okay? Nor was it able to avoid going back below it, as Una mentioned in chat, and it just couldn't really extend overall. So now you've kind of got a short trade set up in saying, all right, as long as this thing continues to struggle with that initial 3-minute high, there's probably a short here because I know that that is resistance. And this is an example where even much later in the day, that initial 3-minute high can still come into play as resistance. Tesla ended up being a big hard fade from that 158 level all the way down to 153. All right, so that sums up all the examples. Again, I'm sure you could find a lot more where it works, and I'm sure you'll find some stocks where it just simply doesn't work. It's a matter of on the stocks you trade, will it work? And once you get comfortable with the basics, you can start using it in more advanced ways, such as measuring how much of a move it makes below that initial 3-minute low or initial 6-minute low, or above the initial 3-minute high or above the initial 6-minute high. Or is it closing back-to-back green candles or back-to-back red candles, stuff like that. This is something, though, that I think is very simple to understand, and it can give you just an easy strategy that you understand that you can start implementing and have some fun and see how it works for you. With that said, this is something that I need to get back to using. I feel like I haven't been doing a good job of just using this simple strategy lately, and it's something that I want to implement back into my trading. Again, this is people who are in the Watch Him Trade chat room always hear me referring to the initial 3-minute high, 6-minute high, everything I've covered in here. And that leads me, to my little plug here for that service, which if you subscribe, you get to see my screen and hear my audio just like you're seeing and hearing now every single day of the week, unless an unforeseen circumstance comes up. And now we've actually added a new option where you can subscribe for $99 a month with a 7-day free trial, Or if you just want to check it out on a given day, maybe you want to sign up for Expiration Friday, you could just pay $10 for one day, where you get chat room and video access for that one day. Maybe you want to trade earnings with me, maybe you want to trade an expiration day, or maybe the jobs number is coming out and you feel it's going to be a very volatile day. Then that's for you, where you don't have to commit for the whole month, but there's no guarantee with that. If you sign up for that one day $10 charge, you cannot get a refund at all. You will be spending that $10, where if you do the $99.99 for the month, you will get 7 days to request a refund. So, and the way you do that, you just go to watchemtrade.com. In the right hand corner, you see the subscribe button. You get either the 1 day one-time fee or the monthly ongoing access. If you do the 1 day fee, you just sign up and you don't have to worry about being charged a second day. Your subscription in our data will automatically be deleted after 24 hours from the time you've subscribed. So if you signed up right now, your subscription would end tomorrow at 7:15. And like I said, as a part of that, you would get access to the Watch and Trade chat room, which is private, and you'd get access to my screen through Join Me, such as you're doing now, so that you could, watch me make trades on the stocks I'm trading. All right. So are there any questions about what I've covered with the strategy, or about anything I've just said related to watchemtrade.com? Any questions at all, I'd be happy to answer. Question, any plans for future webinars? Yes, I am going to try and think of, things just like this, strategies just like this, and turn them into a webinar. And again, this was recorded. It'll be posted on the Watch Him Trade website. It'll be made available on Stockhaven, but not for a little bit. Have to give the paying subscribers first access. And yeah, as for future webinars, as always, if you have a strategy you'd like to see me discuss, send me an email, and I'll see what I can do about that. The thing to remember with webinars when making suggestions is I can only teach a webinar based on something I personally use. I don't really want to talk about something I don't believe in myself. Thank you guys. Take care.